Hey, what's up? Welcome back to How About That Crypto, your home for regular crypto and Web3 news and updates. And I'm your host, Bitcoin Stylist. Today's news and updates is a dose of positive news and an interesting new project. NASDAQ goes crypto. Yes, the NASDAQ. And a new project called SEI, or SEI, is under development. They aim at beating Solana and becoming a decentralized NASDAQ or trading exchange. What does that even mean? Not to worry, I'll explain it all. Please just like, subscribe, follow, leave a comment. It helps support me. It doesn't cost you anything. If you do it right now, I really appreciate it. Don't forget, this is not financial advice. Use the links below to do your own research. All right, so yesterday's news was not very bullish for the overall crypto market. And let's see. I personally believe that we have lower lows in price of crypto. What do you think? You think that we're at the bottom, or do you think there's lower to go? So I have stopped buying for now and probably going to just sit on the sidelines and just start building up cash position. I'm going to make my decisions based on data, but it seems to me that being willing to wait at least until the next rate hike may be a good idea. However, there's a lot of speculation that we will not see the rate hike quite as high before the election. There's a lot more rhetoric coming out about fear of speed of rate increases when we've been hearing people say, oh, well, you got to raise it like the 70s, like in Volcker, when he's raising it like huge percentage points at a time, nothing like what we've seen recently. So I think that that's interesting, but I personally would like to believe that the Fed makes their decisions independent of politics. That was the reason for its design. If you go back and do your research, the original concept of the Fed was that monetary policy is not safe if it's subject to the ever-changing political winds. That said, we will keep an eye on the rhetoric out there and keep you up to date. Okay, so today we have some exciting news. I'm going to share my screen. If you're listening on podcast, just use the links below to follow along or just listen up. And let's see. All right. Author Namcios writes for Bitcoin Magazine, NASDAQ to launch institutional Bitcoin crypto custody services. Report. The exchange is set to enter the crowded market of institutional Bitcoin custody as it aims to become a service provider in the crypto space. Yes, we are talking about the NASDAQ. So what is the NASDAQ? Let's check this out. Okay, it says here in Wikipedia, the NASDAQ stock market, the National Association of Securities Dealers Automated Quotations Stock Market, is an American stock exchange based in New York City. It is ranked second on the list of stock exchanges by market capitalization of shares traded behind the New York Stock Exchange. The exchange platform is owned by NASDAQ Inc., which also owns at NASDAQ Nordic Stock Market Network and several US-based stock and options exchanges. It also says here it's been over 51 years old, and there are 3,554 listings on the NASDAQ exchange with over $19 trillion. So big deal, I'd say so. And all right, so I'm just going to read you these bullet points here. The NASDAQ is seeking to offer custody services to institutions dipping their toe into cryptocurrency. The exchange has been a service provider in the market for some time, but the new move marks a fresh foray into the space. The NASDAQ's new service would bring the company into direct competition with well-established firms such as Coinbase. So the services they've provided in the past is, I think it's right here, institutional. No, sorry. Here we go. They had like financial advisors and oh, here you go, trading and market surveillance technologies. So they're producing reports, they're giving the access to data for all these other crypto companies and exchanges. Now they're going to start getting into the custody world. I think that's pretty exciting, but check this out. This is Catherine Doherty and Yuki Yang report for Bloomberg. NASDAQ makes first big crypto push to lure institutional clients. The firm hired Gemini alum Ira Orbach to run digital division, plans to offer crypto custody and expand to other services. So I think that that's really interesting. I'm going to read a couple paragraphs here. A new group dedicated to digital assets will initially offer custody services for Bitcoin and Ether, which we'll see about this. I mean, this was written 8 days ago, so Ethereum, I wonder if they're going to actually offer custody solutions to it, because of the whole argument about whether it's a security, like I reported after the merge. But anyway, let's keep moving on. According the company's executive president and head of North American markets, Tal Cohen, has told us that they're looking to offer custody services for Bitcoin and Ethereum. NASDAQ hired Ira Auerbach, who ran prime broker services at crypto exchange Gemini, to head up the new NASDAQ digital assets unit, which was really interesting because for a while you saw a mass exodus from well-established names into the crypto world, and now you're seeing people leaving the crypto world to go into traditional finance world who are getting into crypto. Please tell me you see that that's a huge bullish sign. Wall Street's biggest firms are deepening their involvement as institutional investor interest persists despite a downturn that cost jobs and depressed prices. BlackRock Inc. partnered with Coinbase Global Inc. to make it easier for investors to trade Bitcoin, and shortly after offered its first investment product directly in the token. EDX Markets, a new exchange backed by Charles Schwab, Fidelity Digital Assets, Citadel, and Virtue Financial, among others, will start trading some tokens this year. Remember, I said that team of people, Fidelity, Charles Schwab, Citadel, Virtue, they created EDX Markets. They plan on creating, going straight into competition with the current crypto exchanges. And these are big names with deep pockets, and they understand the regulatory landscape. So you can expect this to be positive, in my opinion, not financial advice. So I think that that's really awesome. So what do you think? Let me know. Leave a comment below. And I am moving on. Author Emily Nicole reports for Bloomberg, ex-Goldman's bankers crypto startup backed by key market makers. Flow traders and Hudson River Trading among investors, round led by Multicoin and Coinbase Ventures participation. So let's check this out. Market makers, Flow traders, and Hudson River Trading. So they're market makers, meaning they help exchanges and trading brokerages and stuff they've helped them facilitate trades. So you can have multiple groups taking money and making trades for customers, but they need somebody to help them find somebody to buy or sell on the other side of their trade. So that's called a market maker. So market makers, Flow traders, and Hudson River Trading have backed Say Labs, a crypto startup founded by Goldman Sachs and Robinhood Markets Inc. veterans that is developing a blockchain aimed at speeding up decentralized finance transactions. The investments are part of a $5 million seed round led by Multicoin Capital, with participation from Coinbase Ventures, GSR, New York-based Say Labs founders, said on Wednesday. Backers, which also include Delphi Digital and Tangent, will receive a mix of equity and future tokens from the platform. So basically, you got these former bankers from Goldman Sachs, this former people from Robinhood, and they're decided that they're going to break off and they're going to do their own thing. They have relationships with these market makers, Flow traders, and Hudson River Trading. And they've raised $5 million from these different groups, but they all look like crypto companies. Multicoin, Coinbase Ventures, GSR. Let's see, what is GSR? GSR Investments, maybe? A global firm focused on early stage venture firms, digital health and tech investing. It doesn't say specifically crypto. Yeah, AI enabled enterprise software. Okay, so they got one non-specifically crypto company helping raise the money, but still, so the first story was all these big names that you've heard of getting into crypto in a big way. And at least it seems like a big wave. If you don't think it's a big wave, please let me know. I would love to hear from you. Now, let's go on, and I'm going to read you the last two paragraphs from here. As Say was developed specifically to facilitate trading, its creators hope the network will overtake Solana as one of the preferred protocols for building DeFi apps. Solana was also originally designed to be used in trading, Fang said, but later expanded into gaming and collectibles. Because we built the entire chain around an order book, all the things that Solana could but won't do because it has a ton of other games and other use cases we're able to do. So looks like they're only interested in basically creating a decentralized NASDAQ, for example, or decentralized New York Stock Exchange. And they said it's an order book. So they're looking for people to make trades right on that chain and then make this into basically a decentralized stock market. That means that stocks will trade 24/7. That's crazy. And all over the world. So that means capital can move in and out of US equities at any time from anywhere in the world. So that could be really positive, but it could also be really negative. You imagine if there's like a global boycott on crypto. Well, actually, maybe it won't matter because it would just be the US investors, maybe. But I was going to say, if there's a boycott against the US and everyone's like, sell all your equities at a protest, would that be a bad thing? I don't know. What do you think? Let me know. I think it's pretty cool and exciting. This would be a new crypto project with a new coin, and it would be a layer one blockchain with its own native tokens and apps built on top of it. Remember, a layer one is basically the base layer that other people build apps on. Think of Ethereum. There's games on Ethereum. There's NFT trading platforms built on Ethereum. There are layer two scaling solutions like Polygon MATIC that's built on top of Ethereum. And then the people that are using Polygon MATIC for their applications are people like Mercedes-Benz and Starbucks and Disney and DraftKings. So that's layer one. So layer one is like it's got to be fast and cheap, and people build on top of it. So all these layer ones are competing against Ethereum, trying to get developers to come on. So now you got this one that says, no, we're not just going to be your typical layer one. We're going to be a layer one only for trading. So that's interesting. Let's take a closer look at this project. And just so you know, this is usually how I kick the tires of a project. So I found their website, and I just like to look through their website. It says, Say is the DeFi layer one blockchain, the fastest layer one optimized to give DeFi apps an unfair advantage, enabling entirely new financial products. And you can see here peak finality. So that means that transactions close in 600 milliseconds or 0.6 seconds. Orders, they have 18,000 orders per second and already 20 apps built on top of it. The DeFi layer one, it says most layer ones fall into two extremes: general purpose like Ethereum and Solana, and Aptos. Remember, I was telling you like all the different stuff is built on it. Kind of think like Facebook. You could open up Facebook business pages for all kinds of different businesses. But what if there was one just for trading? And let's see, explores the middle, not quite general purpose nor app specific, but the DeFi. So it's specifically for decentralized finance. It has a built-in order matching. Apps built on Say can leverage the built-in order matching engine to instantly spin up markets for any type of asset and financial product. Unlike every other layer one, order matching is built into the Say chain, making the infrastructure scalable to the billions of users on traditional financial rails. So this is something that I'm not really sure what they're trying to say here. So if you go to order matching, if you click on one of these things, then it takes you to their white paper. So let's just keep moving. Unprecedented speed, front running proof. So people can't front run, meaning they can't like get out in front of other people early based on some sort of like advantage of information or proximity, which I don't know how they're going to stop that. But anyway, and they say they use the Cosmo blockchain. So let's go here. So I'm like, okay, so I do some other research for Say Coin, and then I find this icodrops.com, the Say Network. It says Say Network is an L1 blockchain with a built-in on-chain order book that allows smart contracts to access to shared liquidity. So again, supposed to be a super fast, high performance traders blockchain. They want to get DeFi built on it right now. Most DeFi is on Ethereum. They want the DeFi over here, and I'm sure they're going to tokenize stocks. I'm just assuming. How does that exactly work? We will see. I imagine it's kind of like a stable coin where every coin needs to be redeemable for $1 if it's a stable coin pegged to the US dollar. So maybe there'll be the same thing where like you give Circle $1, they give you one USDC coin. So if you give, say, or one of these apps, if you buy a stock, and then I'm assuming they're buying it in traditional finance world, holding on to it and custodying it, and then allowing the synthetic version to trade. So what kind of regulatory stuff is going to be around that? I don't know. How are they going to prevent? How are they going to like guarantee, like help everyone know that they actually own the stock that's being traded, or if it's just a bunch of BS and it's going to turn into like this big like sham. So I don't see anything in here. But anyway, so that's one thing I'm worried about. So I think about that. And then it says here, token sale is soon. It says down here, the token type is ERC20. That is, if you go over here to ERC20 definition, it says that it's a technical standard for tokens built on Ethereum. So there's something off there. So this is like really where you can like, you get really scammed here. Like token type ERC20, like based on this definition of ERC20, it says it's a guides the creation of new tokens on the Ethereum blockchain, so they are interchangeable with other tokens used in smart contracts. So this is meant to be used in the Ethereum smart contracts. So I think that that's interesting. I mean, are they saying they're going to use the ERC20 standard for the coin, but built on their own layer one blockchain? I don't know. Sounds like, I don't know, might be a little sketchy. So anyway, from there, I found their white paper, and then you go through and you read this white paper. It talks about what it is, who the team is. It says right here, the team is developers from Robinhood, Databricks, Airbnb with extensive expertise in order book design, infrastructure, and the Cosmos stack. Some Cosmo OGs who have navigated the ecosystem for years, and finance and strategy members from Goldman Sachs and other market makers who bridge gaps between DeFi and institutions. I think this is really interesting because of the team involved. But if I'm interested because of the team involved, that means that I expect them to do a good job. And if I buy their token, most likely I'm betting that they're going to be able to build this thing, which sounds like a security. Yes, it does. Now, I guess it depends on how they sell them, because if you go down here, let's see. There's staking, there's voting on proposals. Earlier, I was looking on here and there was like some information that lets you know like when you can buy it, where you can buy it. But it says, they've received $5 million. I don't know. This doesn't make any sense, but I'm gonna keep an eye on there. It's I'm gonna probably buy some when they get launched. I'm probably gonna wait and see how it goes a little bit, but you going through this, I'm gonna have to go through this entire white paper so I really understand it, but it looks super interesting at first glance. And yeah, so in the bear markets are when new coins come out, and these new coins are the ones that blow up in the bull market. Now, there might not ever be a bull market. We might just see crypto just go down and down and down, and people think that the technology isn't that valuable, and the whole thing implodes and we lose all our money. That is a risk, or the government legislates something or regulates against it in a way that is not good for the ecosystem, and takes away innovation. Now, we will see, but for now I'm trying to do my research, get to know the different projects, and even start buying some of these newer projects and other projects that are really doing a lot of development, like Polygon MATIC. all these coins are showing promise for the future, and new coins are really where it's going to be at. The old coins that made people money probably aren't going to make people money this time around. And of course, this is not financial advice. I'm just sharing with you all this. I consume a ton of information. I curate it and I editorialize it for you to make your own decisions, but I also give you my opinions and my summary of what I've consumed. So, what do you think about all this? Let me know. Leave a comment below. Remember, it helps support the channel. It doesn't cost you anything. So please click subscribe. Please click like. Please leave a comment. Thank you so much. I'll talk to you later. Hodl on.